Hello and welcome to AI Market News by LM. Wow, what a day. Today, we're going to dig into a huge reversal and a major realignment that just happened across the financial markets. After a really shaky start to the week, a big wave of green just washed over everything. So what in the world is behind this pretty dramatic shift? Let's get into it.
Yeah, it was a total 180 from the sell-off that kicked off the week. We saw Asian stocks bounce back, and that positive vibe just carried right on through the US session, totally changing the energy on the NYSE floor you're looking at here. So let's put some actual numbers to this rebound.
Okay, looking at the final tally, we can see a clear risk-on feeling in the air. The S&P 500 and the NASDAQ, they both climbed over 0.5%. But you know, the real story? That was happening in the currency markets, where a much stronger dollar completely stole the show. The euro slipped, and the dollar just blew past the Japanese yen, breaking that key 155 level. This dollar strength, that's a theme we are definitely going to come back to. Now, a rebound this sharp, it doesn't just happen in a vacuum, right? This was fueled by a really powerful mix of economic news, some big policy shifts, and a major shakeup at the US Federal Reserve. Let's break down exactly what drove this. So it really boils down to three big things that push the markets higher. First, we got some surprisingly strong US economic data. Second, a couple of really significant policy and trade announcements dropped. And third, and this might just be the biggest news of all, we have a nomination for the next chair of the Federal Reserve. All right, first up, that economic data. The ISM Manufacturing Index, which is a really important way to measure the health of the industrial sector, came in way stronger than anyone expected. In fact, it hit its highest levels since 2022. This points to a potential recovery for a part of the economy that's been kind of lagging, and that gives investors a lot more confidence about corporate earnings and the whole economy. Okay, now let's switch gears to the policy side of things. The White House announced this new thing called Project Vault. It's a massive $12 billion plan to create a strategic reserve of critical minerals. We're talking about things like rare earths and cobalt. It's all about not having to rely so much on foreign supply chains, and this move to secure manufacturing here at home, well, the market saw that as a huge long-term positive. And that wasn't even the only major policy news. A pretty significant trade deal was struck between the US and India, and it slashed tariffs on Indian goods from 25% all the way down to 18%. But the key here, what's really fascinating, is the backstory. This deal happened right after India agreed to stop buying Russian oil, which just goes to show how deeply tangled geopolitics and trade really are. But hold on, the single biggest, most important thing that moved the markets today was the nomination of Kevin Warsh to be the next chair of the Federal Reserve. This has massive implications for money policy, and to really get why the markets reacted so fast, we need to quickly get a handle on some key Fed speak. So, in the world of central banking, you always hear these terms thrown around, right? Hawkish and dovish. So what do they mean? A hawk, they're mainly worried about inflation and they like higher interest rates to keep prices down. A dove, on the other hand, is more focused on growth, so they're cool with lower interest rates to get the economy going. This difference is absolutely crucial for understanding what's happening now. And Kevin Warsh, he is definitely in the hawk camp, big time. News commentary points out how he's criticized the Fed for expanding its balance sheet in the past. That's basically when the Fed buys up bonds to keep interest rates low. And they're calling him a sensible and reliable pick. His nomination could mean a huge shift away from the easy money policies we've seen, suggesting the Fed might get way more aggressive about fighting inflation. And boom, here's what happened the second that the news dropped. You can see it right here. This chart shows the US dollar just surging against the Japanese yen. See, the idea of a hawkish Fed chair who'd probably want higher US interest rates makes the dollar way more attractive to investors. So as traders started pricing that in, the dollar just took off. It really proves the old saying, personnel is policy. And this change at the Fed, it's a big one. So with all this stuff flying around, how are investors actually feeling? You know, beyond just the daily price moves, there's some really neat tools that help us take the emotional temperature of the market to tell us if fear or greed is really in the driver's seat. One of the best ways to check the vibe is with the Fear and Greed Index. It pulls together 7 different indicators to give us a single score. For instance, it looks at market momentum, which is basically just how far the S&P 500 is from its long-term average, and safe haven demand, which tells us if investors are running to safer things like bonds or taking more risks in stocks. Put it all together, and you get a great snapshot of the market's psychology.
And here's another tool that's absolutely critical right now, especially with a new Fed chair nominee on the table, the CME FedWatch tool. It looks at futures prices to figure out what the market thinks the Fed will do with interest rates next. It gives us a real-time probability of a rate hike. It's a must-watch for anyone trying to figure out this new policy landscape.
Okay, so that was today, but what about tomorrow and the rest of the week? Looking ahead is just as important as understanding what just happened. So let's pull up the economic calendar and see what's on deck. All right, a quick peek at the calendar from investing.com shows Tuesday is going to be a big one. We're getting the JOLTS job openings report, which the Fed watches super closely to see how healthy the labor market is. On top of that, we're going to hear from 2 voting FOMC members, Barkin and Bowman. You can bet everyone is going to be listening to their speeches for any little clue about where monetary policy is headed, especially now. So this leaves us with a big question, doesn't it? On one hand, we have an economy that's showing real signs of strength. But on the other hand, we have the very real possibility of a more aggressive, more hawkish Federal Reserve. That tension between strong growth and tighter money, that's what's going to define the markets from here on out. So is this rebound the real deal, or is it just a temporary relief rally? This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.